Hello, everybody. Welcome back to another episode of Bill with a Plan with Coach David here. I put this podcast together and I put it on because I want to help all you business owners out there to avoid paying the price that I paid and help you move along and become successful faster than I did. I made a lot of mistakes. I've learned a lot of things, and it's allowed me to move forward faster. And I'm just trying to put this out there for all you business owners that want to get ahead of the game faster. Well, today we have a bit of a treat. Today we have Karen Bell with us. She is with a business called Fund Your Business. She knows all about helping you find finance as a business owner. And here today we're going to talk about 9 different ways you can finance your business growth. But first of all, let's just welcome you, Karen. How are you today?
I am good. Thank you for the invite, David. Thank you so much. I'm well, and let's see. I've been in this space for a number of years. I used to be a mortgage agent a long time ago. Now I am a business. I do business development, or I guess BDM for short, business development manager. That's just basically sales rep for a private lender, and so that's the space that I'm in. And so I left the mortgage space, and it's a private lending company that I work along with. But I left the industry, and I keep on getting pulled back. So I work in the space as a BDM, where I work with mortgage agents, and through that, there I established a small organization. I call it small because it's just something that just kind of crept up because there was a number of I'm gonna agents and then just family and friends that would kind of say, Karen, do you know anybody that, in terms of helping with financing? And I've always been a connector, so it just it just slipped into my lap. And when opportunity comes, I see opportunity everywhere. So an opportunity came, and I thought, you know what, let me run with it. And that's what I've decided to do. And it's really what it is that I do is someone it will inquire, and because the connections that I have, I'm able to refer individuals and kind of yeah, refer them to whomever that would be able to help them. And so thank you so much for inviting me on, and let's see how we can help others not make the mistakes that we as small business owners do when it comes to finances. Because, and by the way, sorry, just a thought came to mind. So yesterday morning I was waking up, pulled out on my phone. It's, I'm sure we all have that bad habit. Went on LinkedIn, and there was somebody's message that I was reading that was saying that as a small business owner, we don't like to bring finance around the table because we feel that they kibosh everything. But in order to move a business forward, finance, anyone that is in your either on around your, it should be in your on your around the table. And look at that. I have my boardroom table in my background. Yeah, the finance department should be a part of the conversation, and it's not because they don't want to move something forward, is that they have the knowledge to help you move it forward, because they'll ask questions that you're not prepared to ask or prepared to answer, and they will basically hold you accountable. And that's what, in order for any company to move forward, finance is one of the major, the finance department, bookkeeping, accountant, whatnot, they're the ones that will help you be able to determine if your business is viable and how to make it viable and move it forward.
Yeah, for sure. And thank you for sharing, Karen. Like, what it's like, the important part of this is like, this is sort of for 2 different audiences. This is for the startups out there that if you're thinking, or if you're in the process of starting up your business, then there are a number of areas that you have to look at. And one of them is the financing. Like, how are you going to finance the startup of your business? And then the second audience that I'm talking to out there are the people, the business owners that are ready to grow their business or scale their business, but they also need financing to make that happen. So that's what we want to talk about today, is 9 different ways that a business owner can finance the business growth or finance the business startup. I'm going to list the 9 different areas that I think there are. And then, Karen, you and I will discuss sort of the pros and cons of each of those, if you don't mind.
Okay. Not a
So,
problem.
what I see as the 9 different ones is your personal savings. You've been working hard. You may have had a corporate job for a while. You've put some money away. So that it would be number 1. And number 2 would be sort of the bootstrap scenario where you use whatever credit cards or whatever credit you have left on your credit cards to fund the growth of your business. And then the third option would be friends and family. Look to them to borrow money. And then number 4 would be a line of credit. If you can either get a small, personal line of credit, or maybe it's a home line of credit that's attached to your house. And those typically can be larger. But then, of course, you could approach a bank, and if you have a decent enough proposal to them and you've got good credit, perhaps a bank loan is an option for you. But there's also government grants out there that you could look into, or government programs that are there for startups. And then we get into number 7, and that would be private loans. So that's just going out there to someone that's not a bank, you don't qualify a bank, so you go to someone else that can arrange a private loan. So that's an option. Number 8 would be an equity investor. Now this would be more in line if you're ready to scale or grow your business. You bring somebody on as an equity partner, and obviously they're going to infuse some cash into your business. In return for the cash you receive, you give them a portion of your business. And then there are, the rare opportunity to do a non-equity investor loan. That could be an angel investor, that type of stuff. So those are the 9 different types that I believe that you could use to finance the growth of your business. Any comments on that, Karen?
No, that's a good list, an exhaustive list. I can't think of anything else off the top of my head right now, and I guess that list is a good place for us to start.
Awesome.
Now,
Yeah,
go
for
ahead.
sure. I mean, I took this right out of my, business principles workshop that I have. This is actually, foundation number 7 to make sure that you have your finances. How are you going to build the business? All right, so let's talk about personal savings. So, Karen, in your opinion, what are the pros and what are the cons with personal savings?
Well, the pros is that it's theirs, it's yours. You don't have to, answer to anyone regarding that. The cons with that is that you go into your personal savings, and any business, there's no guarantee. Like again, that article I was reading yesterday on LinkedIn was that they say 82% of businesses fail. That just means, what is that, 12%, if I know my math. A very, small number is actually very successful. So you're taking a chance. However, if you believe in what it is if you wholeheartedly believe in it, then it's one of those things you got to put skin in the game. So that's where, but I would encourage, if anyone's going to use their personal savings, okay, you're going to use it, but make sure you have a contingency plan, as in probably give yourself a ceiling, whatever you have sitting there, give yourself a ceiling of what you can touch and what you cannot touch, so you don't, use it all up. Keep that in
Absolutely.
mind.
Yeah,
Yeah, keep that in mind. That's what I would recommend. I mean, you got to put skin in the game, even if whenever you go even to a lender, be it from a bank to private, they want to know that you've put skin in the game. And
exactly.
it's usually probably about 35% ish that they want to know that you've put in.
Right. Yeah, we'll get that into a bit more further down the line, but for sure, the personal savings. Agree with you completely there, Karen. Just to touch a little bit, it is perhaps the only free money you could have. Maybe
Yeah.
family or friends
Yeah.
could loan it to you at 0%, but the personal savings would be your zero cost to use that money. However, as Karen so poignantly pointed out, that that could be your safety net. And if you end up using all of your savings to get the business going, then you have no safety net. And if things don't go as quickly as you would like, you might find yourself in a little bit of hot water. So yeah, the pros are it's your money, it's free money as far as you don't have to pay any interest on it. So then the cons would be if you don't spend it properly or the business doesn't run the way you would like, you have no safety net and perhaps will run out of money. All right, so credit cards. Karen, what
Credit
are
card.
the pros and cons of the credit cards?
Oh, goodness. Goodness. Okay. The pro, well, we're gonna find the pro. The pro is you have access to it quickly.
Yes.
The list of cons is large because the credit card, the interest rate is very high and you got to pay it back the next month. And if you don't pay it back or you pay the minimum amount, interest starts adding on. And all of a sudden, the interest eats up whatever space you had on the credit card. So it's one of those things that I wouldn't encourage it, but yeah, I wouldn't really encourage it. If anything else, find another avenue or get the lowest interest payment credit card that you can. So then pay it off. The moment each month, paying off the whole thing or close to the whole thing because you really don't want to hold any, you don't want to be owing on that credit card. The interest rate's really high. And I think a lot of people are not aware that until it hits them, like even your beacon score, it's called either beacon score, FICO score, or whatnot, different terms, but it's really what lenders look at to determine your credit worthiness. And sometimes you may be late with payments or slow with payments, or you don't pay because then you have to make choices of who gets paid, and or there could just be high utilization, which just means that if you have access to say you have access to $20,000 on the number of credit cards that you have, if you're using 70% of it, it's going to be high utilization and your credit score actually goes down because the high utilization. So it's all those things. And as we're speaking, David, what is coming to mind? And I mean, I'm glad we're having this conversation. I think a number of people have to be, small business owners need to be educated on finances and how to make it work for you as opposed to against you, right? And so what I mean in terms of understanding your credit score and what it means, because a lot of people think that each time I get my credit pulled, it's making my score don't go down, of course. But it's also are you paying your credit on time? Are you paying, your bills on time? Because it shows the lenders if you are or you're not. And then if you have high utilization, again, lenders don't like that, but it looks better. That looks better than if you're not paying at all, kind of thing. So it's a lot of these different things because I'll have people come to me and say their credit is very low or they're embarrassed. And I tell them as a small business owner, it's a part of the process, but you want to be able to manage. So what do I mean when I say manage? And I'm going on a little tangent there, but really have conversation with your bank so there's no NSFs coming out of your bank. So if you know you're going to be slow with a payment, being able to keep in contact with the lender, whomever has, loan you money, be it your bank, be whatever means of getting the monies, because when you have the conversation with them, they know that you want to handle the situation, right? But if you don't have a conversation and things happen, there's a NSF. Lenders don't like to see that NSF. Why? Because it says to them, well, if this person's not going to pay this, how do I know if I loan them money, they're going to pay what I've loaned them? So you always want to be ahead of the game. What do I mean? Just being having those conversations. It's a difficult conversation, but I tell a lot of people that come my way, as a small business owner, I can relate. I'm a small business owner myself. So guess what? I know the credit will be bruised. And so, one, don't be embarrassed about your bruised credit. It is what it is. Every small business owner knows that. And even those that are successful now, they will be able to tell you stories of in the beginning how they had to hustle, they had to grind, they had to whatever. But you do not be embarrassed, but try to get ahead of the game. So if that means calling your bank and, letting them know this is what's happening, this is what's going on, how could we, how could you guys work with me to make sure it's paid on time, or you give me some grace period, whatnot. Have those conversations, because I find a lot of people are embarrassed with their credit or embarrassed to have that conversation. Don't, don't. It is a part of the game. It's part of, and when I say the game, it's just a part of the process. Anybody that's working full time, they won't understand. But as a small business owner, your credit gets bruised, but try to manage it properly. So yes, regarding that credit card, I would not encourage it at all. I wouldn't. But I mean, you kind of look at the situation, make the pros and the cons, and then determine what the best route to go. But you have to make the decision. Don't ever let anyone pressure you into making a decision. Look at your situation, look at the pros and cons of your situation, and then move forward. But don't let anyone ever tell you what to do. Like the words I like to use is I highly encourage. That just means saying that that's me saying that I think you should do it, but I would never tell anybody what to do, because at the end of the day, you make the decision. You have to deal with the consequence of every decision you make. So make sure you're comfortable with every decision you make.
Right, right. So exactly. I mean, there are a lot of cons when it comes to the credit cards. The positive or the pro would be, as Karen mentioned, it's readily available. You can use it pretty much everywhere. Obviously, you can't pay rent and or leases with that as far as bricks and mortar location. But there are a whole list of cons that Karen went through, and a lot of the times the getting yourself in a hole in the beginning with credit cards is the worst thing that you can do, because once you get
Yes.
yourself in that hole, as Karen listed a lot of the reasons why. It's almost impossible to get out. So I would recommend that if you were ever going to use credit cards, that you limit what you're going to put on that, but also look at your cash flow. If you are
Mhm.
just starting out, you're a startup business and you have no cash flow, then be very diligent in what you put on your credit cards. Because if you rack that up to 80, 90% of your limit, that's a hole that's going to be very, very difficult to climb yourself out of. So, credit
Mhm.
card is the least of desirable of our finance. But sometimes we have no choice. But again, like I said, if you are in a cash flow business, perhaps credit cards is the way to go. All right, let's move on to number three. That's,
Yes.
borrowing money from friends and family. All right, Karen, what do we see the positives and what could the negatives be for that?
Geez. Okay. Positive is that they know you, they love you, they respect you, and vice versa. And with that being said, that's the positive. You can, they if they know what you're doing and what you're up to, and they know in terms of character, then you can ask. Now, with that being said, be a person of good character. What do I mean? Be a person so that when you ask, they can say, you know what, I know this individual from a personal perspective. I can trust that they'll be able to, they'll borrow and they'll give back. Now, with that being said, money can make and break friends, right? And you don't want to borrow from someone and then you don't pay it back, or you're really slow to pay it. So make sure the terms and conditions are spelt out. And then I would say, like, even when you're asking family or friends, never pressure anyone into doing anything for you, right? You ask, you establish what you're looking for and what terms that you can work with, and let them make that decision. Never pressure anyone, especially family and friends, because it then becomes very uncomfortable if it's not moving in a timely manner in terms of paying back.
Yeah.
And
Sorry, Karen.
no, 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 go ahead.
No, I think you nailed it on the head there. Like, if your friends or family, friends would probably be my least favorite of the two, just because you could 100% ruin your friendship, and family. Again, don't pressure them, like Karen said. And just to reiterate what she also said, make sure you have written down in writing and agreed upon what the payback terms are and what will happen
Yes.
if you fail to pay back. Is there any
Hmm.
interest going to be on that, or is it an interest-free loan? But you should always look at the expectation of paying the money back. Don't go to your parents and say, "Oh, I need 20 grand. I'll pay you back when I can." Right? Like that's the worst way to go into it. If you're going to be a business owner, you need to look at this as a business transaction, not
Yes.
son or daughter and parent relation. This is going as, just think of the family or the friend, if that's who you're going to, and look at them as a bank, someone that you're going to go and put a proposal in and agree on what the terms are going to be to pay back that, and what happens if you have to miss a payment. Karen talked about this in the previous one about the credit cards. If you are upfront with your banks, with your family, with whoever it is that you're working with, it's better for them to know beforehand that there's going to be an issue with a payment than to expect that a payment to come in and not come in. That is what really hurts your integrity and your credit when it comes to banks and so on. So make sure you're communicating and act as if this is a business transaction and not a family transaction. Anything else to add to that, Karen?
Yeah, no, I would 100% agree. And a philosophy that I have is honestly, and I really try to live like that. Do unto others as you have others do unto you. So if the shoe were in another, was on the other foot kind of thing, and you loan somebody money, you'd want them to respect the terms and the conditions. And so if the payment cannot be made for whatever reason, being upfront and say, this is the payment cannot be made and this is why, and this is my intention, right? You'd want, if the tables were turned, you'd want the same somebody to have that same respect for you. So you want to do the same.
Yeah,
You want to do
100%.
the same.
Yeah.
Go ahead.
No, 100%, Karen. Yeah, just up front and get ahead of it, right? Okay,
You know,
so
get sorry, I was
pardon?
gonna say get ahead of it and just operate from a place of like truly integrity. That's really at the end of the day what it is. Like if you know, like even in terms of your business, that if you're pretty confident that it's gonna work, then come from a place of confidence. If you're coming from a place, and I mean, and if you're not confident, you shouldn't even be doing it, period. But if you're like, you know what, this is what I want to do, and I'm believing in it, and these are the pros, these are the cons, these are ups and downs. Like whomever you're going to be borrowing it from, try to be honest, especially when it comes to friends and family.
Hmm.
Don't give them the, oh, I'm going to make 100,000 the first year. Yeah, that's a nice thought. But being upfront and honest and being able to say, this is my intention, this is what I want to make. And then, of course, life happens. And, as a small business owner, and I'll give you a little joke. So when I started doing mortgages, this is a long time ago. So I did my business plan. And I don't remember if I said I want to make 50 or 80,000 for the first year. I can't remember. Let's say it was 50. Of course, that didn't happen. I just, got started. And so, whenever you do your business plan, especially when you're doing it alone, you're kind of, the numbers that you're putting in are like the pie in the sky, the best numbers ever. That's this is perfect. And then you realize, okay, it's not so easy. So just going back and being as honest as you can with whomever you're borrowing the money's from, and then keep them abreast of what's happening. So then they'll know and don't again, if small running a small business was easy, let me say that again. If it was easy, everybody would be doing it. So It's not easy, so not everybody, there's so many people that have ideas that they want to do, but there's the chances of for success are low and it's scary and all that stuff. So when you go in and even asking, being upfront and honest, and then and then if you're not able to make that payment that you said you were, don't tell them the day of just or the day before. You know from when you have enough an idea from probably weeks, maybe whatever, weeks ahead. Let them know, you know,
Yep.
and maybe they can, make concessions or, even whatever, but put the person in a position to at least being able to, so that you can be honest, and so they know that okay, it's not working as well as this person's plan, but they're open and honest with me. What can I do?
Sure.
Right.
All right. So yeah, the last number ones are we talked about make sure you design whatever you do as a business venture or business transaction, and be in front of it. So let's just there's there's six more to go here. So let's just kind of go through, just stick to the pros and cons of these. But just keeping in mind, like we talked about, make sure you look at this as a business transaction and be full communicative when you are doing this. So, line of credit. Now, this is a personal line of credit I'm talking about. So this is something that you could perhaps get an unsecured line of credit for maybe $5,000 or $10,000, just because you've been at a bank for long enough. Or this could be a larger line of credit that is tied to your house. Karen, so what would be the pros for this to have a line of credit?
The pros are that you only pay for basically what you use, and then each time you use it, you could put the money back in, and it's there's like a nice little cycle there. So I there's pros. The I would say the pros are there. I can't. I'm kind of just racking my brain thinking, are there any cons? I imagine there are, but I just think the pros is that you borrow the money and you use it, and then when you're paying it back, you pay as much back as you can each time. But you know what I mean? And just it's a nice little cycle. You use it and then you put the money back in. Use it, you put the money back in, and you have just access to the amount that you've borrowed against, either against your home, usually, because it's usually a line of credit is against something.
Yeah, I think you're right there. It's probably one of the safer bets here as
Hmm.
far as financing goes. In a lot of cases, too, you can carry a balance, and a lot of times they will request that you pay only the interest. But I guess the con in that would be that uh, rack up that line of credit. Maybe you start hitting the top end of it, and all you do is continue to pay the interest. So that loan will still be there regardless, right?
Yes. Yeah.
And that could affect your credit if you down the line want to get a mortgage or do something else. So the
Yes.
con would be you need to stay on top of it. Don't just pay the minimum. But as you had mentioned, Karen, it's a great carousel, if you will, of money that is, if you can pay it back fairly quickly, then it's there when you need it. So that is great for a line of credit. Now, what about a bank loan? What are some of the challenges or
Well, the bank loan, um, the drawback is that okay, you do have to pay it back. You know what I mean? You definitely have to be paying back the loan, and the interest is, usually I want to say not too bad, but it's still it's better than, say, I'm gonna say like a credit card. It's way better, say, than a credit card. So if you can get a loan, you go ahead and get a loan, and then there's monthly payments that you need to pay against that loan, and do it on a monthly basis, and it's a set time in which it comes out of the bank.
right? So
So
yeah, loans are decent. One of the challenges though is that you need to be able to qualify for that loan. And
yes, you do need
that
to
goes
qualify.
back to, Karen touched on it pretty thoroughly with the credit cards and so on. That if you have high credit card debt ratio, and your credit isn't that good and you don't really have a lot of income coming in, especially if it's a startup, then getting a bank loan may not even be possible. But if you can get a
You-
bank loan, that's definitely one of the lower interest, the cost of borrowing um, ways to get money to finance. Now, the con, I
Yes.
don't, there's not a lot of cons on there because it does help make you be a bit disciplined, right? You do the monthly payment is usually lower than it would be whether it be on a credit card or even a line of credit. But you
Mhm.
do, I guess maybe one of the cons are you're tied to that for the length of the loan. If it's a 5 year or
Yeah.
a 10 year loan, you have that on the books for 5 or 10 years. And you can get yourself in trouble, of course, as we mentioned previously, that if you don't pay it, then it could really have some detrimental effects to you as a business.
The
Now,
most definite.
yeah,
I'm
so
sorry, actually,
yeah, go ahead, Karen.
I was just gonna say that even with say a loan, like especially say for a business, now they only lend you how much that so okay, when a lender looks at you apply for a loan, they're looking to determine if they should give you a loan and how much. It's based on how much money you're bringing in to make sure you can manage the loan. Because if you cannot, whatever you're bringing in per month is not able to sustain the loan, then say you're looking for, I don't know, 100 grand, and they're like, you don't bring enough money to manage that. They will either bring down exactly amount to what they feel that you can manage per month, or they'll say no, you didn't qualify. So you have to be bringing enough income in order to manage and maintain your loan.
Exactly. They want to make sure that you're going to be able to pay back the loan. So, yeah, if your business is only generating $100,000 a year and your profits 20,000, and you go and ask for $100,000 loan, um, they're pretty much going to laugh you out of the office because there's no way for you to service that debt based on your current
Yes,
situation. So keep
exactly.
that in mind, of course. Be realistic when you're looking for that type of stuff. Now, government grants or programs. Now, they're a little bit hard to find, but if you can find them, they're actually pretty good. Would you say, Karen?
They are very good. That is, lack of a better word, free money, but it's not, it's free money, but it's really taxpayers that yourself and others have, given to the government. And so then they distribute it. So, or they give it to, different organization, whatever it is. So they are harder to get.
Hmm.
However, they're there, and you always want to be connected, being able to speak to somebody that can help you to get a government loan, sorry, government grant.
Yeah, grants are fantastic. They don't just hand them out to everybody, so you do need to
You have to.
qualify, and then you also
Yes.
need to apply for these programs. And what that means exactly is that again they vet. They want to make sure that you qualify and what you're trying to do does fall into their parameters. So it's great if you can find it. But a lot of times too that it's difficult for just the average business owner to
Yes.
apply for that. So they actually look for other people. There are a lot of service people out there that will help you apply for these grants, but they will
Mhm.
also they'll end up taking a portion of that grant as well as payment
Yes. Yeah.
for their services. But it's something to definitely look into if you can.
And going back to that, when it comes to getting a grant, there's really a process. Crossing the T's and dotting your I's, and like you said, they're not so readily available, so you have to know where to go ahead and locate it. Yes, they're on the government website, and you have to, kind of know what you're looking for and looking at, and knowing, crossing your T's and dotting your I's, and when getting that done. So a lot of people actually reach out to, either a grant writer, somebody that just to know what the government is looking for when giving out the funds.
And another con in a way would be it's not instant money. Like with a line of
No.
credit or any kind of loan, you usually have access to, with a bank loan, obviously you need to apply it, but you could probably get it within 30 days for sure. But a government grant could take 3 months or longer to
Or
realize that money after you've put in the application. So it's not quick money, but if it's a grant, it's obviously free money. So that would be something to certainly consider. Now let's move on to number 7 here, and this is private loans. So these are generally from people who have some excess savings that they want to earn some money on. So this is not a lending institute. This is usually a private individual. So Karen, what are some of the pros and cons of a private lender?
there's, let's see, private money. Years ago, when I was in the mortgage industry when I first started, they were hard to come by. These days, there's a little bit more access for private loans. Again, the thing is they're not so readily available. It's almost like you know somebody that knows somebody that may have extra money that they want to go ahead and invest in. There's example private investor, angel investors, etc. And say being in the right circles and knowing who has the funds in order that they want to invest. When it's and it's not so easy to get, to be quite honest, right? Because it's somebody's savings that they're now putting into someone. So it's a little bit more challenging, but it's there. It's just you would need to just know who to go to in order that has that access to those funds. And it's the pros regarding that is that if you have something that's very unique and you speak to the right people, somebody will be able to be there. But you also, they again, going back to, they want to know that you've been able to put something in.
Right.
And then yeah, they want to know that you've put something in. And sometimes even their interest rates could be really high.
Much higher, yeah, and that's one of the things that I wanted to touch on. That the private lenders, they are more lenient criteria to loan you money, but you're definitely paying that price. Where
Yes.
perhaps the bank might charge you 6%, the private lender might be charging you 10, 12, 14% for that money. So the cost to borrow money is much higher. It's a little easier to qualify in their eyes. But as Karen had mentioned, it's not like you just go onto Facebook and find a private lender. You need to know somebody that knows somebody, and they will set up the deal for you. And obviously, there's a cost to that, and the cost, interest rate is much higher. So, because obviously they're taking a much bigger risk. All right, now
Exactly. I was
yeah,
going to say that's the risk that they're taking.
for sure. So yeah, so private lender to me is kind of a last straw if you need to, if you really need that money and you are, I would say you need it, but you have like a really good chance of making that money back. I mean, because that would be the probably the shakiest one to get into, because they're going to want something in return. When you get a bank loan, they're going to go on your credit and that type of stuff, and they might not really look at any kind of for you to put anything up against it. But a private loan for a business, you may have to put up part of your business if you fail to pay for it, or maybe I don't know what they would be asking for, but it will not be cheap for sure.
Exactly. You say that. That's a perfect segue into the next one, the equity investor. There is someone that I'm working with right now where the investor is asking for an astronomical amount, like into for funds, they want, I think, just over 40% of the client's business.
Hmm.
And so it's like being a small business owner, it's not for the faint of heart. It isn't. It's great when it's working, and then when you're just getting started, it's exciting, but it's also scary. But the end result, when it goes as you have planned, it's wonderful. It's amazing. So don't want to discourage anyone, but you do need to do your homework and have the right people in place. And so, yeah, going back to the equity investor, they want to get, a bit of equity. We've all seen, what is it, Shark Tank and what was the Dragon's Den,
Yeah.
where they put in some funds, but they want some funds, equity and, equity shares into your business. The nice thing though regarding some of those is that anybody like again Shark Tank or like Dragon's Den, they also provide the supports to make it happen. And that's what you would want as well,
Well,
is the
yeah.
the supports. Yeah.
Yeah, it certainly depends on who. Like if it's somebody that just has the money, then they may or may not be able to bring anything else to the table. So the pros, obviously, it's easier to get the money because they're getting a piece of the pie. But the problem with that is that pie is not finite, like with any kind of bank loan. You have the bank loan for 5 years. If someone buys into your business, then unless there's some agreement, then they're going to get that 10 or 20% year over year over year over year over year over year over year. So you really want to make sure that that's the right move. I'm not saying it isn't, it could be, but also, as Karen said, if they are asking for too much of your business, then you have to really consider, can I get the financing some other way? So that one is really a case by case basis. Depends on your business. It
Yes.
depends on, how long you've been in business, where you want to go with the business. Is there enough profit in equity to share? Do you already have business partners, right? There's a lot of things to consider. So that one would be a little bit something to be challenging with. And then the last one is the non-equity investor. That one would be, not like as in they don't want the piece of the business, but they're going to have a piece of the profit for X amount of time. So they don't own the business, but there's an agreement where that you will pay them a percentage of the profit for X amount of days or X amount of years. Sorry.
And at the end of the day, I guess, again, case by case, it all depends on how much they were looking for. So, again, case by case, and you weigh it. And especially when it comes to, I'm going to say, anyone getting any kind of equity or whatnot, making sure you sit down with a lawyer to
Oh,
discuss the
100%.
options, to make sure you understand what you're getting yourself into.
Yeah, great point. I want to
Because,
reiterate that the last two, equity investors or non-equity investor, you definitely need to have a lawyer, and and your accountant should be part of that as well. All right,
yes.
Karen, I don't want to keep you any longer. I've been grateful for the time that you've been able to spend with us right now. So, if someone wanted to get a hold of you, what would be the best way for them to get a hold of you?
Okay, they can reach me at my number is Karen Bell 647-282-0050, or fund URBUSINESS at gmail.com. So it's fund FUNDUR and then business at gmail.com.
All right, so if you want to find out more information and connect with Karen directly, there's the information. So hopefully you will find value in this podcast and you will like it, and you can share to whoever you think that might benefit from this as well. And if you have any questions or comments, please add it below, or you can reach out to me on any of the socials at Your FS Matrix. So that's Your F as in Frank, S as in Sally, Matrix, on all the medias out there. And grab this podcast, share it, like it. All right, until next time, Coach David out.